Hey guys, welcome back to the channel. Let's dive into this with a detailed and thoughtful recap just in case you missed the last video. This context will help everything fall into place as we dissect the recent price action of Zebec Network. The coin has been in a harsh downtrend for a while now, and this isn't your average dip or minor correction. No, this has been a prolonged and aggressive sell-off, and it's one that has caused serious concern in the community. We witnessed price movements that weren't just dipping, but rather moving downward in a stair-step fashion. A sharp drop, a short consolidation, followed by another leg down. This type of price action isn't unusual in crypto bear cycles, but for those holding Zebec, it's been a rough ride. Even when the price seemed to find a floor or some sideways structure, it inevitably caved under pressure and moved lower. That sort of choppy, descending channel has worn down a lot of sentiment. There was, however, a brief surge of optimism around Monday, June 23rd. On that day, Zebec managed to push up and give us a decent pump, a move that caught the eyes of many traders and investors. It was a glimmer of hope. But what followed in the days after was disheartening. We observed an overwhelming return of bearish pressure as the price dropped back down. Nearly every candle on the daily chart following that pump was red. The weekly candle ended up closing in a strongly bearish fashion, and that alone was a major signal to traders that further downside was not only possible, it was likely. One candle doesn't tell the whole story, but when it's part of a multi-week pattern of lower highs and weak buying interest, it becomes much more meaningful. Now, despite that brief midweek buying candle that popped up on Wednesday, it was weak. Very weak. It didn't show real momentum. There was no volume to back it, and it wasn't enough to signal any kind of structural shift. But fast forward to the days around July 6th through the 8th, something interesting began to happen. The structure began to shift ever so slightly. For weeks, we'd seen lower highs, a classic hallmark of a bearish continuation, but suddenly a new pattern emerged. Instead of continuing the downward slide, we saw a strong green candle form. And this wasn't a normal candle. It was large, bullish, and definitive. It screamed momentum. It screamed change. And if you were paying attention, it was hard to ignore. Zebec rocketed from approximately $0.024 all the way up to $0.037 in what felt like the blink of an eye. That kind of movement is eye-popping, even in the world of altcoins. We're talking about a 53% move in less than 2 days. Possibly closer to 56% depending on the time frame you measure it from. That sort of explosive breakout doesn't happen in a vacuum. It's the result of built-up pressure, possibly short squeezes, accumulation, and sudden market interest. But as is always the case, no rally lasts forever. The coin pulled back down to about $0.31, which actually turned into a decent support zone. This wasn't a crash, but a controlled retracement, a necessary pause for any healthy uptrend. The support zone held for a while, which gave some hope that perhaps Zebec was gearing up for a second leg. However, reality soon caught up with the momentum. There's a significant resistance level sitting at $0.039. That level is like a psychological and technical ceiling. It's not just a number, it's a battleground. Bulls need to conquer that level if they want to change the macro structure of the chart. Until that level is flipped into support, long-term bullishness remains speculative. And let's not forget the looming support at $0.0, arguably the most critical price point for Zebec right now. A fall and close below this level would spell serious trouble. A temporary dip is fine, that happens all the time, but if Zebec closes below $0.22, the entire bullish outlook could be at risk. The importance of holding that floor cannot be overstated. Now, if we switch over to the 4-hour chart, we can see a massive rejection candle form, the kind of candle that looks like it came straight out of an institutional trading textbook. On the hourly chart, it looked like a classic setup where market makers trap late longs before dumping the price. And when we examine the daily, things become even clearer. Strip away all the noise and indicators, and we can see the price was trying to break above. It hit 0.361 and then failed to close above that level. Instead, it closed at 33533. That's a lower high. And in the world of trading, A lower high at resistance is a red flag, a warning sign of potential weakness ahead. Here's where things get tactical. If we close below 31, we then have two confirmations of a bearish reversal. That would signal to a lot of traders that it's time to take profits, reduce exposure, or even go short. As a trader, I would be thinking that a return to 2C6 is not just possible, it's probable. That price point represents a previously tested support level, and institutional players may be looking to re-enter around that zone. If the bounce from there is strong, great, it might signal the start of a new uptrend. But if the reaction is weak or short-lived, we could face another wave of selling that takes us down to 0.23 cents, or even the dreaded $0.02 support zone. So what's the ideal bullish scenario? In a perfect world, Zebec would hold the 0.3210 zone. That means the candles close above it, not below. Ideally, we would consolidate, move sideways in a tight range for a week or two, and then mount another attack on the resistance level. This time, instead of getting rejected, we'd linger near resistance, absorb selling pressure, and break through with volume. That kind of breakout is sustainable. But in truth, that scenario isn't likely at this moment. Based purely on probabilities, a return to 0.226 seems much more plausible, and we'll need to watch the reaction there carefully. If momentum is weak on the rebound, and we can't get past 0.031, then another rejection is highly likely. That would bring us down again, possibly to 0.223, and eventually back to retest 2. And if that happens, all eyes will be on the weekly close. A close below 0.020 could trigger panic, while a strong bounce would confirm the level as a long-term support. Now, let's zoom out and take a broader look. It's true, we are still technically in a bearish trend. The macro structure hasn't changed yet. We haven't broken out of the descending pattern. We haven't seen any meaningful higher highs or bullish divergences on higher timeframes. So it's fair to say that, as of now, there's no confirmation of a true reversal. But here's where we find a silver lining. Every coin, without exception, moves in cycles. This isn't unique to Zebec. The last time Zebec had a strong breakout, it spent weeks in sideways action. Specifically, it consolidated for 3 full weeks, then saw a minor manipulation dip, and then, in the 4th week, exploded. That's not just coincidence, it's a classic accumulation pattern. The market was preparing for a move. Smart money was positioning itself. So if you're seeing Zebec go sideways again, don't panic. In fact, sideways movement is often the best thing that can happen after a dip. It means the market is building a base, digesting previous price action, and preparing for its next move. If this pattern repeats, we could be just a couple of weeks away from another significant rally. And when it happens, it will likely be sharp, fast, and unforgiving for those who exited too early. What's the short-term outlook? Well, realistically, we could still see a drop of about 10 to 15%. The charts support that idea. The momentum isn't strong enough yet. We haven't seen enough volume. And while that might sound bearish, it's not the end of the world. Corrections are part of the game. They provide new entries, new setups, and eventually new highs. Long term, my bullish stance remains intact. I'm still optimistic about Zebec as a project. It has solid fundamentals, the development team is active, the technology has promise, and more importantly, it's still early in the larger market cycle. Bitcoin might move faster in the next few weeks, but altcoins like Zebec tend to follow. And when they do, they move in big ways. Remember, Zebec already had a strong rally less than 2 months ago. That's not a long time in crypto. We are still in the cool-off and reset phase. When altcoin season arrives, and it will, Zebec will likely be one of the coins that catches fire. So if you're holding, stay patient. Keep your eyes on the key levels. 0.0032 for short-term strength, 0.026 for mid-term support, and $0.02 as the last line of defense. These are the zones where trends shift. These are the areas that tell you everything you need to know about what comes next. And that's it for today's deep dive. If you found this breakdown helpful, make sure to hit that like button, subscribe to the channel, and ring the notification bell so you're always updated when we drop new content. We're watching Zebec closely, and as soon as the tide turns, for better or worse, you'll hear about it here first. As always, this is not financial advice. I'm not your financial advisor. I'm just sharing my thoughts, my strategies, and what I'm seeing on the charts. Make sure to do your own research before making any investment decisions. Thanks for watching, and I'll catch you in the next one. The content provided in this video is for informational and educational purposes only. It does not constitute financial, investment, or trading advice and should not be considered as such. I am not a licensed financial advisor, and the views expressed are solely my personal opinions based on current market analysis. Cryptocurrency markets are highly volatile and carry a significant risk of loss. Always conduct your own research, DYOR. Consult with a qualified financial advisor and never invest more than you can afford to lose. Viewer discretion is advised.